Brace yourself. Millions of Americans could be blindsided by soaring health insurance premiums in 2026 unless Congress steps in at the 11th hour. And this is where the debate truly heats up. For years, the Affordable Care Act, ACA, also known as Obamacare, has offered enhanced premium subsidies that significantly reduced health insurance costs for people buying coverage through the government marketplace. These extra subsidies weren't originally part of the law, but came later, first as part of the American Rescue Plan in response to the pandemic, then temporarily extended with the Inflation Reduction Act. But here's the catch. These critical savings are set to vanish at the end of 2025 unless lawmakers act. And if Congress doesn't renew these enhanced tax credits, according to experts from the nonpartisan health policy group KFF, average ACA premiums could skyrocket by an astonishing 75%. That's over $700 extra out of pocket each year on average for most enrollees. Imagine waking up on New Year's Day in 2026 to find your health insurance suddenly far more expensive. This could become reality for roughly 22 million Americans currently relying on these subsidies. Let's break down who's at risk. ACA marketplace plans are a lifeline for people who don't get insurance through work. Think independent contractors, freelancers, students, early retirees, and even those temporarily between jobs. Without the beefed-up tax credits, a huge segment of these households will face price hikes that could make health insurance unaffordable. Why does this matter so much? The enhanced subsidies have been a game changer, pushing uninsured rates in the U.S. to historic lows. In 2023, just 7.9% of Americans lacked health coverage, down from 9.2% in 2019. But the Congressional Budget Office warns, if these subsidies expire, more than 4 million Americans could end up uninsured over the next decade. Here's where political lines are sharply drawn, and this is the part most people miss. Democrats have championed these extra subsidies since 2021. Arguing they're essential for affordability and for keeping coverage within reach for millions. Republican leaders, however, remain divided. Hardline lawmakers like Representative Andy Harris insist the subsidies are an unaffordable pandemic relic, saying, "Can't afford it, newsflash to America. COVID is over." Others in the GOP worry about the political fallout of voters facing health insurance sticker shock, especially with the 2026 midterms looming, and might push for a temporary extension. Let's talk dollars and cents. Maintaining these enhanced subsidies for 2026 alone could cost taxpayers around $25 billion. Opponents ask, is this sustainable in the long run? Supporters counter. Can we really afford to let millions lose coverage or face ruinous bills? Here's how premium tax credits actually work. First established under the original ACA, these credits make health insurance premiums more affordable for lower and middle-income Americans. Originally, only people earning up to 400% of the federal poverty level qualified. For example, a family of 4 with a 2025 income under $128,600. With the enhancements, eligibility expanded and out-of-pocket spending was capped at 8.5% of household income. If the enhanced credits end, the impact will be dramatic at every income level. Households earning up to 150% of the federal poverty line between $32,150 and $48,225 for a family of 4 could see their annual premiums shoot from $0 to $387. Those between 150% and 200% of the line, up to $64,300 for a family of 4, could see costs more than quadruple, jumping from $180 to $905 per year. For families earning above 400% of the federal poverty level, all premium assistance disappears. These households could pay close to $6,500 annually, up from about $3,600. And here's something else to watch. Insurance companies are already anticipating big changes. Many are proposing unusually steep premium hikes for 2026, an average increase of 18%, as they brace for uncertainty around whether Congress will maintain expanded subsidies. This is the largest projected rate hike since 2018. Here's the real controversy. Should the government continue pouring billions into premium subsidies to keep insurance affordable? Or is it time to let the pandemic-era assistance lapse, even if it means millions pay more or lose coverage? Is there a smarter, fairer way to reform health insurance pricing altogether? What's your take? Should Congress invest more to prevent a premium shock, tighten the budget, or try something totally new to tackle rising healthcare costs? Do you agree with ending these extra subsidies, or do you worry it will unnecessarily penalize working families and the self-employed? Let's talk. Agree or disagree? Share your opinion and help drive the conversation forward.